Now that we've seen the stock market start its downfall and the downfall of many other assets, from crypto to EFT stocks to gold and silver, all of these things seem to be crumbling, yet one thing remains consistent, and that is the housing market. And a lot of people have been anticipating a crash, and people are saying with these rise in interest rates that we're seeing and that we're going to continue to see, with the Fed saying they may raise the interest rates up to 7 times this year, it has a lot of people wondering, when is this bubble also going to crash? And in today's video, what I want to talk about is why that may be further away than you think. And before I get into that, I do want to urge you to subscribe to this channel and turn on the bell notification, because this is a channel centered around using your money to get where you want to go financially from an investment standpoint. So if you're interested in investing in stocks, gathering more information about what's happening in the finance world, and ultimately just getting started on your investment journey, and you want a good resource to turn to, this is a great community that we've started here on this channel. So you want to make sure that you are subscribed and that you have that bell notification on. But let's go ahead and talk about this housing market crisis and why I'm not sure it's going to slow down anytime soon. Now, when I say that this housing market's only going to continue moving forward, there are some areas that have been impacted by these inflation rates. So not all markets are remaining hot. Some of them have cooled off quite substantially, but for markets such as Phoenix, Arizona, where I live, and other markets like Texas, for instance, they continue to stay hot. And even though these interest rates are climbing, and from what the Fed says, they should continue to climb to the tune of potentially up to 7 more times this year, that may not be enough to cool this housing market off. And there's a couple of different reasons that I want to talk about why that is. And then we'll talk about some potential solutions to combat this and how you as a single family person may be able to get a home, but you might have to wait a little bit. When the Fed decided to raise interest rates, they had one thing in mind, and that was to curb borrower spending. If they raise the interest rates, it's going to create fear in the market, and it's also going to discourage people from borrowing more money, therefore giving the market a chance to cool down. So naturally, what they were hoping would happen is, if they're raising interest rates, less and less people would buy homes, therefore cooling off the housing market, which it has in some areas. However, there's other areas that don't seem to be impacted much by these rising interest rates. Now, what we've really seen happen is this has made it next to impossible for single families to buy new homes. And even if they have the financial means to do so, they're certainly not jumping at the opportunity to buy a home, knowing that these interest rates are only going to continue to go up. Now, what that's forcing people to do is ultimately rent more houses, which is why we're hearing a lot in the news right now about people complaining about rental prices, because as less and less homes are available, the cost of rentals ultimately goes up. Now, when the Fed raised interest rates on homes, they were hoping that the buying of homes would slow down altogether. However, the effect that this has had is less and less single families are buying homes, yet investment groups and Wall Street groups are buying more properties. And what that's essentially doing is keeping the market hot right now. And the ideology behind it with these big banks and these private equity firms is, if they buy these homes, it really doesn't matter what interest rate they pay on these, because they can just pass that cost down to the renters, who ultimately have no choice but to pay that rental cost, because without it, they would have nowhere to live. And so unfortunately, what we're seeing right now is companies like BlackRock, who may not have their own funds set up for buying real estate, but they're investing in companies like Progressive Private Equity, who specializes in residential homes, single family residential homes, which now BlackRock can reap the rewards of getting into the market without directly investing into it. But they ultimately are taking more and more houses out of the market for people to buy, therefore shortening up the supply and increasing the demand, which again is then passed down to single families. And that's why we're continuing to see these prices year over year continue. And it's not really having much of an impact on the price of houses, nor how quickly these houses are selling, because although single families are not buying, the banks are not going to stop buying, because they're going to buy as many of these properties as they possibly can. Now, what does this mean moving forward?
Whoop-de-doo! What does it all mean, Basil?
Because ideally, the raising in interest rates is having the opposite effect you had anticipated having to cool this housing market off. And unfortunately, the answer is not as easy as it appears, because we are a free market country where big business has the ability to come in and buy up assets in order to keep their business afloat. And that's exactly what we're seeing. We have a lot of companies that are investing into these single family homes using markets like the Zillow inventory, the Redfin inventory, and buying up these properties in bulk through business deals in order for them to build their portfolio and hedge against their own personal recession in that company. So it's almost like an ebb and flow where everything is down that these big Wall Street companies would normally invest into, except for the real estate market. So naturally, they're going to flock there to keep their assets from losing as much as what we've already seen in things like the crypto market and the stock market. They're ultimately trying to hedge against loss. So that's why we're going to continue to see this market stay the way it is until eventually it reaches a breaking point, which it will reach a breaking point, but it may be one of the last things that breaks before we ultimately just start to recover and get over this recession that we find ourselves in right now. And so you may be asking yourself, okay, well, I'm a single family owner and I really want to buy a house. I'm done renting. When am I going to get an opportunity to do that? And unfortunately, the answer isn't as cut and dry as I'd like it to be. There are steps that certain states are taking in order to stop these big funds from coming in and buying these residential properties, ultimately making it so single families can't afford them again. One such state is New Jersey, who is in the process of putting a law into place that restricts big business from coming in and swooping up all of these properties. Another state is California, who's putting measures in place as well to stop these big businesses, again, from coming in and purchasing these single family properties that ultimately the average everyday consumer wants to buy, but unfortunately doesn't have the ability to do so. So there really is no cut and dry answer for when this housing market crisis is going to be here or when it's ultimately going to collapse. And this is something that before I bought my first property, I really started researching, because I had a lot of people in my ear 2 years ago telling me that this housing market's going to collapse in 2 to 5 years, which scared me as well. And it put me in a position of, I don't know if now's the right time to buy or not. But the longer I am in this investing game, the more evidence is appearing to me that it's not going to slow down anytime soon. And just in a short period of time that I bought my first property, it's already accrued 6 figures worth of interest in a very short period of time. And I see that continuing until ultimately this housing shortage that we have catches up and we have these restrictions in place for big businesses to no longer buy up these residential properties. So what am I doing in the meantime? I'm going to continue buying more properties. I think that ultimately the interest rates are going to continue to rise and there's nothing we can do about that. But should that stop somebody who's wanting to invest in real estate, whether to use it as an asset or used as a rental, should that stop them from ultimately buying real estate? That's up to you. For me, it's not going to. And the reason why is because a lot of these are going to be used for things like Airbnb or rental properties. I might use them for Airbnb right now while the interest rates are high, because I ultimately don't want to be part of the problem of passing these high rental prices down to the average everyday consumer. But vacation homes for people are always going to be a necessity. And then potentially when the market starts to recover from this recession and the interest rate starts to lower, I can then turn around, refinance, pull equity out of the house, but then also keep the mortgage low so I can get everyday renters in there as well. So it's information like this that I've stumbled upon that's really put me in a position to say, hey, I don't think this is going to slow down anytime soon. And the only way to really combat this is to join those people making the most money right now, because unfortunately, if you can't beat them, you got to join them. So I wanted to address that question because that's something I get quite often being in the mortgage industry and having investment properties. And I thought that it might be helpful for those people that, regardless if they're investors or not, or they just want to buy their first property, it's best to get all the necessary information you can to make the best possible decision for yourself. So I figured that I would put this together for you to hopefully help you make the best decision for you and what you're looking to accomplish. And of course, if this is information that you found helpful and you are interested in learning more about the finance world, whether it be crypto, stock, real estate, whatever it is, this is definitely the community for you. So make sure that you smash that subscribe button and turn on the bell notification. Other than that, look out for those interest rates here on Thursday, because they are going to be making an announcement if they're going to be going up or not. And that's going to be huge for us moving forward to know what's going to happen with these markets. But other than that, have a great rest of your day.